Hello friends and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Tata Consumer, which could be a multi-bagger in years to come with consistent performance. So let's understand about the company at the moment and whether it is expensive or not. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Tata Consumer, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up from now and then. And I have also started with a monthly pick that I put up on every week, every first week of the month. Plus, this detailed watch list has around 70 stocks in which I put up buying ranges and keep updating after 7 to 10 days. For detailed market or company talk or analysis on personal portfolios, etc., you can directly email me and we can work things out. Now about Tata Consumer, established in 1964, they provide coffee beans for major clients, and they have also acres of mainland tea coffee estates. Then what happened was in 2017 they tied up with Starbucks, and they are also now you can say like a franchisee for Starbucks and selling coffee as a finished products to consumers, and they have cafes across India. The first one opened in Mumbai, have become an FMCG brand currently. So from a Tata Global Beverages, which was a coffee company, it has become a FMCG company, one of the few beverage companies that is listed and is doing well. If you look at the financials now, they have been very strong. So if you look at the Q2 numbers, then there have been a 50% growth in sales, as you see, over 2,800 crores of sales, and the profit surged by around 60%, and that is why the valuation is around 80 times earnings or 70 times earnings. It's a debt free company, low promoter but very decent institutional holding in the stock. Return on equity has remained low at 5.5% but is increasing. Operating profit margin is decent at around 15%. If you look at the performance, so over the last 4 years, so before 2016, I must say that for 3 4 years it did not do anything. But over the last 4 years, it has become 4x in 4 years. But it fell 50% from the peak of around 400 in February March fall. Now it has taken out that 400 levels, and they came out with outstanding results, and the stock kept moving higher. So it has been surging since March. It has corrected. So what happened was just 2 weeks back it had corrected from 590 all the way to 480 470, and that was the time when I started making the presentation, but I record it today when I'm posting it. So the stock has surged again, but it was at around 470 480 when I was making the presentation. So from 590 to 470 has been a recent correction, but now the stock is again surging, and I won't be surprised if it takes out the recent highs of 590 and may just go past 700 going forward in few months time. It is the top investors are buying into it. So what has been happening is retail investors are waiting for major corrections, even further corrections, because they think that the stock is expensive. But large investors, institutional investors, and informed players are buying into the stock. PE expansion has already taken place after restructuring. So, from a coffee company, it has become a consumer company, and the expansion took place in a big way from 200 to 20 levels. It just surged to 400 in no time, and that's what happens when a company turns around, becoming a consumer oriented company from a commodity company. That's how the PE expansion takes place. So that has taken place, but the kind of numbers that the stock is showing, I won't be surprised if the surge continues going forward in the next few years to come. So it can give around 18-20% CAGR over the next 10 years. I won't be surprised if it does that. It has the backing of the Tata brand, and in that regard, you can be rest assured that the company will continue to do well unless there is heavy competition from other brands, which is happening. The numbers should continue to do extremely well and should give you 20% CAGR, 17, 16, 17% in difficult time. It is a big consumer stock. There is backward and forward integration in the stock. So what I mean by that is they have their own coffee beans in coffee plantation, plus they are selling through the chain of you can say Starbucks, and they own stores, etc. So there's forward integration there. The only Starbucks play at the moment, the only play you can say on to the young consumer market here in India. Very few companies do that. There is no listed, you can say, mobile phone player. There is no listed smart television player. There is no listed, you can say, Apple is not listed, or other products which are among the best in the, you can say, the young people or young generation. But Starbucks is one thing that is going to catch up even in the big way. Currently it is not that big here in India, so over the next 5 6 8 years it could become even bigger once things normalize, things get better on the ground. We will see even better numbers. That's my assessment. Expand. So what will happen is there will be more expansion with more outlets, and that will lead to further traction in numbers and sales and profitability. And remember that it has already corrected. So the valuation will seem expensive, but from 590 it corrected to 460, 470, 120, 130 rupee correction. That's a 20% correction on a very decent company that is churning out 50-60% profit growth. So that was a great buying opportunity. Now the stock is surging again. So maybe it's going to surge past 590 in this bull run in this mid and small cap section. So what needs to be done? In my opinion, you need to wait for major declines to buy. So major declines in this case is between 10 to 20%. So I have marked this out that 470 to 520 are good levels. So any declines of 3 to 5% from the current levels would be good opportunity to start accumulating the stock again, or you go ahead and buy at new highs, because then it's going to move up 20-30% even from there. That's my assessment. But do not put a lot of money. 5% is not a strict resolution here, but whatever money you put in, you should not be worried about the money that you put in for the next you can say 3-4 years. Invest for the next 4 to 6 years. It will reward you big time. There is always a case that next year could be difficult for the market with the kind of surge that has already taken place. So keep that in mind. We could be sideways to down on major stocks, and maybe 5 years down the line everything will normalize, and you will get decent returns out of something like Tata Consumer. So this is my video on Tata Consumer. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.